Hi traders, Nathan Bray here from ACY Securities. Well folks, we have a jam-packed, data-filled, interest rate announcement filled. We've got retail sales, we've got manufacturing data coming out on the US. We've got ECB versus the US as far as trying to control their inflation or their PPI data. It's going to be a jam-packed, very volatile end to this week. Okay, so that is something to keep in mind. Last night we had a slightly weaker CPI or inflation data coming out on the US side. However, it's still growing. It's still up at 0.1%. So it's not going negative yet. And the other side of it is your core inflation is still sticking around. So how will this feed into a pause on the interest rate announcement coming out tomorrow morning Sydney time, followed by the PPI data following the CPI? Okay, so all of these data events could be creating some major volatility in the market. Then the next day we've got European data, okay, coming out along with the ECB will be announcing their interest rate decision as well. Are they going to rise? Is the US going to leave their interest rate where it is? Are they going to come out and say, well, we'll be data dependent, we may rise next month? Or are they going to say, listen, this will be our terminal level? So there's so much uncertainty in the market. So what I like to look at right now is I want to see the technicals. I want to look at where the markets are at. So let's have a quick look at this US dollar index, okay? So the US dollar index for me is trading in a range. So we are looking at the bottom of the range around this 100.80 support level, which I've spoken about for the last few months for trading opportunities. However, all the way in the high five, so 105, let's call it 106, it seems to be at this stage the top of the range. Right now, the dollar index is sitting smack bang in the middle at 103. So from this median level, good news, bad news over the next few days, we could see some volatility off sitting right in the middle and no really clear direction at this stage. Okay, so that being said, I'm sort of looking at key levels in this range. So I'm looking at around the 62 to 79 fib retracement level, whether you're using your fib tool down or whether you're using it up in this range. So these levels, up at the higher level, I'm looking at around 104.66 for potential shorting opportunities if price was to spike up there and hold, okay, and not get above it. And on the downside, I'm looking around this 102.35 level. So this 102.35 was previous resistance. Could that become support and be a large chunk of the range down around that 62.79 retracement level on the downside? So these are the sort of key levels in this range that I'm watching as all the mixed data could be revealed over the next few days. The other thing, of course, is trading off the top and the bottom of the range. Keep in mind, if we get a break below one or above one, then the range trading is over. It's not something we'll look at. Now, the other one is the euro against the US dollar. It tells a very similar but inverted story. So we're looking at around 105 all the way up to 111. Where are we at right now? We're just failing in the middle there around 108 down to 107s. So again, it's in a very similar situation. It's like an inverted dollar index at this stage. So therefore, if you're trading the euro dollar, we could see a lot of volatility inside this range at the moment until the market starts to digest where we're at the end of this week. So those are very similar trading ideas on the euro dollar. Now, if we do get some strength, however, in this US dollar or really positive US dollar data, the levels I'm looking at are two pairs. So I'm looking at the dollar CAD. Dollar CAD is right down the bottom of its range. So if we get some strength in this US dollar, it's right down, as mentioned by our own senior market strategist, Duncan Cooper, at this 133 level. That could provide some amazing buying opportunities with some positive US data coming out and some US dollar strength. The other one is the Aussie, our own Aussie against the US dollar. It's right up at this 68. The Aussie dollar is right up at this 68 level at the top of its range. The longer term trend is down. So this could provide some amazing shorting opportunities if we get some more strength back into this US dollar. Good luck with your trading, everybody. And please, folks, make sure you've got your levels in place because the markets can get very volatile with this kind of data. That's all from me. Have yourself a great end to your trading week.